morning and welcome, Patriot Radio News Hour. Joe and Jason here on this Friday. Yeah, we made it through another. We had a big storm roll through the valley last night. A lot of wind. Depending where you were, some places got rain, which we always love here. It's cooled down. Yeah, it's going to be upper 90s, which is awesome. Of course, don't worry, though. Right back up to over 100 degrees next week, but fall is coming, so get excited about that. We had a lot of data come out today. Another day, more revisions. More revisions, this time in the jobs data. We'll give that to you. Of course, we had the government jobs number. It was a 187. Yeah, not a homicide, no. 187,000 jobs for the month of August, and that was exactly what they had last month, but then they revised last month lower. The month before, they essentially just said, hey, take July, June, May, April, March, February, January, and lower all of those. So we'll see. I got a funny feeling this number will probably get revised lower as well. The unemployment rate, though, ticked up to 3.8%. Now, I'm not excited yet, but this was a pretty big move. I mean, we had unemployment about 3.5, 3.8 this time around. I think this is cool enough to help with the every other. The Fed does not want to raise at the next meeting. They really don't. They should, but they don't. The wage number in there was a little softer. About 1/10 less than what they expected. So, Jason, overall, I think they wanted less jobs. Let's be honest. Right? They would have loved 100,000. They would have loved that. Heck, they would have loved 75,000. But 187,000 was the number. The tick up in the unemployment rate and the I guess less wage pressure anyway, a little less wage pressure, probably enough. Again, we'll still wait for CPI data. That's the last other big economic news that's going to come before the next rate hike. Well, the next Fed meeting.
Yep, and these jobs numbers, like we've said many times, it could be a little misleading because a guy who has 2 jobs gets fired, he doesn't have a jobless claim. And then he goes and gets another second job. So now he's added on to a new job, right, Joe? So these numbers were meant to make the job market look good. That's the way they rigged these numbers, and so they don't make it look bad enough when they want it to look bad. So I think they're suffering with that, Joe. And it is coming apart. Even at some point, companies won't be hiring. And companies will be flushing workers a lot faster, and it could be happening soon. There's a lot of activity, a lot of business news coming out every day that says things are getting a lot worse, Joe.
Yeah, and again, when we look at inside of these numbers, July revised lower. Remember, it was 187. It was revised lower by 30,000 jobs. June was revised lower by 80,000 jobs. Matter of fact, June now they're saying was just 105,000 jobs. But they went back. I've never seen this before. They've revised every single jobs report lower for the entire Biden administration. So the whole time Joe Biden's been president. It's almost statistically like impossible, isn't it? I mean, every month was lower. There wasn't one month where it went the other way, according to the Bureau of Labor Statistics. Nope. Every single month. Listen, I'm not accusing anybody of anything, but it almost sounds like somebody over at the Bureau of Labor Statistics, whether they were told to or whether they just did it on their own, sounds like they were trying to make things look better than what they were because, again, I've been doing this for 20 years, Jason. I've never seen anything like it.
Well, somebody must have recently got in there to Biden's office and said, hey, look, you can't be fudging the numbers anymore. We need to go the other way. And when we go the other way, the numbers need to show us that we need to go the other way. And let's face it, Biden is not the most important player in the game. He's just a pawn.
Yeah, well, we all agree with that. Again, we saw it, and whether it's the FBI, the Department of Homeland Security, all of these agencies seemingly just doing whatever their political bias want them to do. And this is just kind of another example of, they're telling us, listen, as Americans, we're supposed to, be putting money in that 401k, investing in, you got to save for your retirement. Well, how can we make good choices if we don't know what the data really is, right? If you come out and say, hey, oh, by the way, hey, for the last 3 years, all of this stuff, and again, for what is this, the third or fourth day in a row they've come out with all of these revisions, and all of them, to the worst side, right? Because some numbers lowers worse, some numbers higher, but it seems like whatever the worst case scenario was, that's where these numbers went to. It just makes life really, really difficult for everybody out there because how do you know what you're supposed to do?
Well, it's maybe they should just do like they did with the inflation numbers in the 80s, just recalibrate it so that they can give them the number they want. Just instead of use metric, instead of standard. My dad's a mechanic, we had to, depending on I started having a Japanese car and suddenly he had to start learning metric,
Right. Maybe that will be 800-951-0592 is our toll-free number. allamericangold.com is the website. When we get back, another union saying we want to get paid. And oh, by the way, what is going on with oil as it's surging again today? We'll tell you why when we get back. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Friday. A quick look in here at the markets. We got a mixed market on Wall Street. The Dow's up 40. The S&P's up 4. The Nasdaq's down 20. Gold is flat. Silver's down 15 cents. The 10-year note, right, of course, 10-year fell pretty significantly this week. Rising today, 418. But the news of the day, crude oil up another $1.50, $85 and change on NYMEX crude. Brent crude, $88. So just $90 a barrel right around the corner. And let's face it, let's call it what it is. The economy's slowing, and slowing pretty quickly. China's economy slowing, Japan's economy, Europe's economy, and yet crude oil is surging. Listen, inflation skyrocketing. Gas prices this Labor Day going to be the highest maybe ever. I don't know. Maybe there was that one brief time right near the financial crisis. I think oil shot up like $120 a barrel or something like that. We're right around the corner. But super high gas and of course power bills, things I think when we look down the road, let's look 3 months, 6 months, a year down the road. There's not very many good scenarios. The majority of scenarios, when you look at it, favor a bad outcome. And, of course, with the boom and bust cycle that we've had, really going back to the 70s, since they officially went off the gold standard and just decided to heck with it, let's just have debt everywhere. We've been in this boom and bust economy, and it's I hate to say it, right, but it's time for another bust. It's a great time to look at alternatives. We've talked about commercial real estate and its problems. Jason warned about this a few weeks ago. The small and medium-sized, and I'm talking small and medium-sized, especially the publicly traded small and medium-sized businesses, starting in 2024, all of this debt needs to be refinanced, and of course refinanced at these super, super high rates, which we expect this wave of bankruptcy. We expect this to get worse next year. It's a good idea. It really is, to take some of that money and say, you know what, I'm gonna look at alternative investments. I'm gonna get my gold. I'm gonna get my silver. Check out why refi. You got to have 50,000. That's the minimum. But you can get up to 10.25% returns. It doesn't care about Wall Street. It could care less. It doesn't care that once again for, I don't know, the 15th week in a row, banks are pretending that they're not insolvent by borrowing a record amount from the Federal Reserve's new emergency program. Right? They don't care about that stuff. They don't care if the Fed raises in September or pauses in September. Why refi doesn't care. Here's the best part. How many times have you said to yourself, you know what, I don't even want to look at my IRA. I don't want to look at my 401k. How many times have you said, man, I'm so nervous, I don't know what to do. So I'm sitting on my hands. I've got $200,000, $300,000, $500,000 sitting in the bank. Making 3 or 4%. That's ridiculous. Up to 10.25%. It doesn't change. Every month it'll be the exact same. You can turn your income on. You can turn it off. You can compound it. There are no fees. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or do what I did. Just call them. 888-YREFI24. That's 888-YREFI24. So, Jason, we had really bad news. OPEC really now is taking advantage of the idiotic policies here in the United States where they don't want to drill for oil. We shouldn't be here right now. I mean, think about what I said about the oil inventory reports just this last week. Down 11 million barrels. Down 11 million barrels. And it's almost like it does that every week. Russia and OPEC today announced more oil cuts. Not only oil cuts today, oil cuts next month, oil cuts in October. Jason, they're getting ahead of the curve. They're looking at what we were just talking about. They're like, well, China's not doing great, right? Europe's got problems. The U.S. has problems. Let's cut more oil. So now, believe it or not, we've got a slowing global economy, and yet we've got oil prices surging to where here we are on a Labor Day holiday. By the way, we'll be closed on Monday for Labor Day. I probably should have said that. The radio station will be closed. Patriot will be closed. We'll be back open on Tuesday. But, Jason, OPEC, I got to give them credit. They've done a much, much better job in looking ahead than they've done in the past. Usually what happens is they keep pumping, the slowdown comes, and then they're reacting. They're cutting after the fact. Today they announced another 1 million barrels are going to be disappearing from the markets. And by the way, next month they're going to take another 500,000 barrels off of the market. And this is why we're seeing crude oil going even higher today when a jobs report that was, let's say it wasn't hot, maybe lukewarm at best.
It just seems to me that the United States and OPEC are working together to create a higher oil price when the crash comes, so they don't have to go down to it. Everyone should just be pumping and pumping, even if there's going to be an economic crash. We should be doing. They can still make money at $1 a gallon, or even $1.50 a gallon. They can still make money, Joe. They're going to keep their margins, and then of course people aren't going to drive as much during a market crash, a market downturn. And but though they're going to make sure that $3 a gallon is the staple, $4 a gallon, $5 a gallon. I mean, can you imagine when people stop driving because they just can't afford gas, and it's still $5 a gallon? Can you imagine?
It's so funny. Yeah, here
fleecing of the lower end of society.
Here. Yeah, we're $4.50 a gallon here, and again, like I said, oil here $85, Brent crude, $88. And this is historically a time when we see oil prices start falling because, as Jason says, heading into the winter months, a lot of places, like in Colorado, there's snow on the ground. You just don't drive that day unless you have to. If I got to go to work, I'm going to go to work. But I'm not making extra trips, right? And the wintertime is when gas is supposed to be the cheapest. We should be seeing gas prices starting to fall. And instead, we got the exact opposite. We've had gas prices rising here for the last, 5-6 weeks in a row now.
Yeah, and when things start to go the wrong direction a lot faster, how long? The question is starting to not be if, which there's a few people out there that say, well, is this thing really going to go down? But it's more of a question of when. But I think the biggest question is how long. I think the question is how long, and I think that's the question that the Fed and those that know what's going on, that's the question they don't want to say out loud. I think the Fed meetings, Joe, they're going to talk about all kinds of stuff. When a recession shows up, they'll talk a recession once it's actually here. But what they're not going to talk about, or they're going to try to avoid the most, is how long is it going to be like this? I mean, I see a situation where it goes like this and stays like this for a long time, Joe, a decade. We could see 5 to 10 years of this once it gets going, Joe.
It's going to be very hard to see equity growth, right? When we talk about Wall Street over the next 10 years. It's hard to see it, right? This is why, we have Joey come on every Monday, because you're going to need somebody that they know what they're doing and play parts of the market that people normally haven't played. You got to remember, for about 2 decades now, the Fed has gone on this crazy economic policy. 15 years of zero. What were they trying to avoid? That they needed rates to be zero for 15 years. And it created this crazy environment. And now, this zero rate environment that they had for so long is now coming back to haunt everybody. The banks are haunted, right? The investors out there are haunted. The housing market is at a standstill, but yet prices aren't falling. Heck, I saw an article yesterday. They're talking about investors. This is going to be guys that, hey, I'm investing in, I'm going to fix it up and sell it. The flipper, and it's the guy that, hey, I'm going to rent it. Down 50%. And, of course, the investors, they were a huge part of this market. You've got people that, Jason, because of the rate they locked into, they're not moving. And they're not moving for decades, right? They're not going to be moving anywhere. They've literally caused, how about this nightmare on commercial real estate, but the nightmare that we just talked about in the last segment. What is going to happen to all the small and medium-sized businesses? Because here's what the big companies did. The big companies borrowed as much money as they could for as long as they could before the rates went up. Unfortunately, these small and medium-sized businesses, they don't have the bond. They don't have the bond rating to do things like that. So they borrowed as much as they could, and they borrowed it for as long as they could. The problem is, as long as they could was like 2024. 2024, 2025, you're talking the majority of the small and medium-sized publicly traded businesses all need to refinance their debts. Right? And this is debt. This isn't debt tied to a building. This is debt tied to the functioning of their business. And all of a sudden now, going from, hey, I borrowed, say, $500 million at 3%. So now I need to borrow $500 million, and I've got to pay 7, maybe 8%. And all of a sudden, that puts them in a position where, hey, I was making some money, but now that I got to pay these higher debts, we're now in the red. And the only option they're going to have, Jason, is to cut costs. Now, how do you cut costs? You cut costs by laying people off. And unfortunately for some of these businesses, it's such a fine line that there is no cost to cut. Right?
Yep.
It's simply, I've got to go file bankruptcy. And I think that's what we're going to see.
Yeah, cost cutting can be closing your doors, and then that hurts the banks and businesses around that one, right? Because if you're a business that shuts your door, then you don't buy from the other businesses, and you don't help the bank that you're borrowing from. And Joe, you said you have trouble looking at, equities, stocks, stock markets earning in the next years. We already have that blueprint. We had 2 defaults. They don't call them defaults, but 1933, it was a default when they took gold. 1971 was a default when they took us off the gold standard. And the stock market in 1929 was down for 27 years, 27 years. And then in 1968, the markets went down and didn't come back for another 25 years. Like to those levels they were at, Joe. Easily we could see that we don't get to our highs for a decade.
$800-951-0592 U.S. Silver Eagle rolls. These are all coming out of sealed boxes, sealed cases of Silver Eagles. They haven't seen the light of day yet. $660 a roll if you want a case. $16,500 at 800-951-0592. And, man, I don't know where to go, so I'm just going to rattle off a bunch of different things. Flight attendants now, after pilots got all their big raises, the flight attendants union saying, hey, you got to pay us. They want a 35% pay hike for the flight attendants. The price of, unfortunately, the price of airline tickets, you got higher oil prices, right? You got to pay the pilots more money. Now we got to pay the flight attendants more money. You know who's like, you got to pay the ticket gate, the bag handlers. Flights are going to get more expensive, and this just breaking an alert issued by the FAA that a major aircraft parts supplier in London was shipping fake parts, fake replacement parts, and now they're going to be grounding all of these planes that had these parts. So not great news on the airline industry today. And not to be outdone, Europe's top copper producer, Airbus, not Airbus, not the aircraft maker. This is the largest copper producer in Europe. I don't know how these things happen. Said that they were a victim of a major fraud where they are going to lose hundreds of millions of dollars, where they were duped by their recycling suppliers and their own employees, where they were buying essentially recycled copper that they did not actually get. And Jason, again, this seems to be happening regularly. Everywhere we're looking, it seems like they're up. We got a shortage because of this. We got a shortage because of that. And all of these inventories, why is it a big deal? Well, because all the inventories for all this stuff, I don't care if it's silver, gold, copper, oil, aluminum. I mean, you pick the major commodity, corn, wheat, soybeans, the major commodities that the world needs. It seems like all of them are at near record lows, record lows, or stuff like this. Up all of a sudden, we don't have nearly the amount of copper we thought we had.
You know, it's interesting, Joe, because I keep pointing out these shortages and how it seems like a lot of it is being forced on purpose. And I think, I guess there's some logic to it. We only report the things that we know that are being admitted that are happening. So just based off that, there's less stuff. They're making less stuff. And it really sounds logical that, okay, we're going into a downward market and there's going to be less stuff needed because people aren't going to buy anything. But China's starting to print, last I heard. What if a couple of, you don't have to have the world reserve currency to create inflation all over the place. What if a few of these countries just start printing a bunch of money? And you got less stuff? How long does it take to put the spigot back on if suddenly a bunch of printing starts happening? You have massive, massive, massive inflation that could happen. If just what if Russia just starts printing and the Eurozone just starts printing because China's printing? Yeah, I know it's not the dollar, but suddenly they're going to buy stuff. And there's not going to be stuff to buy, Joe. Very tricky situation when you mess with markets like this.
Yeah, it's interesting. China, big rate cut today, a whole point rate cut out of China. To Jason's point, China is firing up the printing press. And it's going to be interesting. And unfortunately, there's more coming. China's got big problems. I think Jason's right. I think there's going to be a huge printing happening in China. We know about Japan's problems. Look at our problems. The Biden administration out today. You know what? We should form a new drinking like every Friday. I'm thinking what we need to do is we need to stockpile all of these instances where all these fossils that we seemingly can't stop electing into Congress have these senior moments. Biden was at the podium again today for FEMA, and we need billions and more for Florida and Maui. Got lost. I don't know how you get lost, but he got lost. Didn't know which way to turn for the podium, but was saying not only do we need this money for the relief, but then said, these climate deniers out there, we're going to need a lot more money to on this climate change initiative. And Jason, remember they called that initiative the Inflation Reduction Initiative. Remember how much fun we made of that, right? They obviously don't know anything about how inflation is created. But today, the Biden administration's out there saying, already setting the table for more spending.
If they keep leaving the same people in place, these people are getting old in Washington, D.C. I feel like there's going to be a zombie movie in Washington, D.C. where these guys can't die. We got to keep these guys here forever because we can't find people that are as bad as these ones that we can control. That's what it feels like, Joe. I can't believe how many old timers are just almost falling over in their public meetings. Seeing, was it the Republican
Mitch McConnell?
No,
yeah,
Mitch McConnell. Yeah, it's terrible seing this.
And they don't retire.
He literally looks like a zombie.
Yeah, they don't retire. It's like, oh well, I'll do it again next week. Oh, man, it's so – no wonder why we're in the problem. You know what? Just that alone should be reason why every phone line should be lit up right now. Michael Snyder. We love Michael Snyder. He does a great blog. I like him because he always does the list thing. That's kind of his thing. His latest is the 8 reasons we're on the verge of a major credit card debt crisis. Think about, then this is how things work. We got problems with commercial real estate. That's a crisis. The banks are hemorrhaging money, right? Nobody wants to leave their money in the bank, and why would you? Now we've got this crisis coming up. We know about the small and medium-sized businesses and what's facing them starting next year. And now the consumer. We just saw inflation, or we just saw unemployment tick up. We're We're going to check in on exactly what's going on with all that credit card debt when we return. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up a Friday here. I guess the week of revisions, right? Never in my life have I seen so many today. The BLS saying, hey, every year of the Biden administration, we overestimated the amount of jobs created. And then today, we saw the unemployment rate. Now, it's not alarming yet. But normally when you see the unemployment rate go up, it goes, 0.1%, maybe 0.2. This one was 0.3. I know you're like, well, come on, it's only 0.3. Still pretty big jump in a single month to 3.8%. And of course, at the same time, the consumer, because of inflation, sitting on record amounts of credit card debt. Michael Snyder says, hey, we're on the verge of a credit card crisis. And again, I think we're kind of in this, I don't care what debt it is. Commercial real estate debt, business debt, credit card debt, auto loan debt, right? It's debt. We're in a debt crisis. We've been in a debt crisis. The Fed and the government together have created this horrible nightmare. Remember, we can't do this to our kids and grandkids. And then they did it anyway. Right? Then they did it anyway. And now, again, because of the cycles we're in, we're getting ready for the next bust. Number one on his list, total amount of credit card debt by the New York Federal Reserve hit a new all-time record high. So now credit card debt is above $1 trillion. And you think about some of these banks, what caused these banks to go under, right? Silicon Valley Bank, right? They had $100 billion, $170 billion of assets, but it was essentially about, $5 to $10 billion took them out. $5 to $10 billion took them out. We got $1 trillion plus of credit card debt. The average interest rate, and I don't carry, I don't have a lot of credit cards. And well, actually, I guess from the businesses I do, but I don't ever use them. Right? I just don't use credit a lot at all, and if we do, it's always paid off. It's 21%, almost 21%. That's the average. So the people that have had late payments and all that, they're probably paying close to 30%. Now, keep that in mind, because the average balance is also at a record high. So the interest rate's at a record high, the average balance is at a record high, and then the amount of people that have balances is also at a record high. They're now essentially just under 50%. About half the people that have a credit card, Jason, are carrying balances every single month. And so for these people, which is usually, let's face it, people that, they're probably at the lower end here, most affected by jobs. I'm paying higher rates than I've ever paid. I'm carrying a higher balance than I've ever carried. And now more people are carrying balances than ever before.
Yeah, I said it a few months ago. I was actually sent a credit card offer, and I got stupendous credit. I just got checked recently, and I had an offer that showed up in the mail for 30%, 30.47%. So they're giving introductory offers for 30%. It's insane. I mean, I know in the 70s and 80s there wasn't a lot of credit cards compared to now, but I don't even think they even offered it at that high of a level, Joe. I think even when whatever the target rate was at, 10%, 14%, whatever, however high it get, I don't even know if they offered 30% credit cards back then. But here it is now, right, Joe?
Right.
30% introductory offer.
You had to have the worst credit ever, right? At that rate. Now that's kind of like a standard, right? That's not high. That's not low.
I'd go look for Rocky Balboa and get his loan shark at that point. At least you'd be dealing with a person instead of a telephone message. That's about how high those rates are. 30%, really? How is that even?
Call your local loan shark instead, right? Yeah. Well,
they're competitive now. Now they're competitive, Joe.
Right?
Let's face it. Loan sharks are competitive now. I bet. And I don't know what they're charging at the payday loans. Are they charging more than 30? What are they charging, Joe? If the credit cards are starting to offer 30?
Yeah, it's right. Think about this. By the way, the average balance now. It's not like they got like $500 because that's what I thought. Okay, maybe it's $1,000. $7,227 is the average balance that's being rolled over, and it really is kind of hard to see delinquencies. We're now we had those years. With COVID, they gave out so much money. All these delinquencies fell to historical lows. They've risen so quickly. Credit card delinquencies now have surpassed where we were before COVID. So go to 2019, right? We're already above that. Same thing with auto loans. We're getting real close to, okay, we got a problem, right? We're not there yet, but it's real close to, hey, we've got a problem. And this is what Michael Snyder's talking about. Hey, we're right on the verge here. And again, when you think about why are they using it? And it's simple, Jason. They don't have the money, right? When gas is $4.50 a gallon, you go to the grocery store. Hey, what $300 used to buy, it's now $400 or $500. I mean, everybody understands why. The problem is now more and more of them have run out of rope. And now that the unemployment rate just shot up again, I expect the defaults to surge again. That would just make sense. Take the Radio News Hour, final segment coming up. $800-951-0592. Gold just shot higher here, 1948, 1949. Silver coming back as well, $24.35. The Dow now getting ready to go into negative territory. The S&P is down. The NASDAQ is down. Right now, the Dow's up 4 points. And again, more details on today's jobs number. According to the household survey over the last 60 days, 670,000 full-time jobs lost, replaced with 1 million part-time jobs. That's not a good formula. That really kind of explains a lot. And now the first sizable increase in the unemployment rate. Things, again, we're slowing into this thing. I'm going to still call it gradual, but the suddenly is coming. Get ahead of it here. Rolls of U.S. Silver Eagle, $660. Sealed cases, $16,500. If you're looking at some gold, $10 liberties at $1,115. By the way, the premiums of the $10 liberties are right back to normal now. So we had like almost, 18 months of really low premiums on the 10 libs. Jason, someone went into the market and just bought it all up, and now they're right back to where all the other gold is.
Yeah, there's still a lot of buying going on. There's a lot of buying going on. There are people with deeper pockets that are definitely loading up, and we haven't talked about it this week too much, but the central banks record buying still going on. So it's interesting that the prices stay in this nice lower spot, because when it goes, it won't be coming back here once it goes.
Yeah, and gold, it really shows itself. It's one of the best, if not the best, asset in recessions. It does better than just about anything else out there. So not surprising that we're starting to see both gold and silver starting to move now as we've gotten closer and closer, right? This calm that we had over the summer, a lot of that now in through revisions taken away, and now the numbers that are coming out for August, not very good, on top of inflation coming back. It's kind of like a double hit here, which is why you're seeing gold and silver perform so well over the last couple of weeks.
Yeah, and I've been hearing a lot of talk about silver. A lot of people are starting to aim more at silver, and then silver catching up to gold a little bit, so to speak. It was at 83 to 1 currently, and so silver. So, there's a lot of bubbling up talk that the guys I'm watching, Joe, that says silver is getting ready to go on a big ride and bigger than gold. So I like both. I've always liked gold and silver. So, but silver has some room to run, Joe. When it's allowed to run, it will run fast.
Yeah, I mean, I think everybody out there kind of has that same thought on silver. The question for silver, it's not if. The question is, hey, when's the run going to happen? And really, when you think about it, we've gone from $18 silver to $24+ silver. But the realities are, everybody knows right now silver should probably be in the low 30s. And really, we should be talking about when silver going to break its all-time record highs. It's still at $50 an ounce. So there's a lot of room there. 800-951-0592. Jason and I were coming right back with the Half Empty Cup.